Hi everyone, I'm Masa Salimzadeh from the Passer Trader team. Welcome to our channel. Today I want to speak about the CPI rate on September that came on October 13th. If you want to trade on Forex or any other markets, you should check news about CPI and inflation about dollar because they both have many effects on US dollar's value. As you can see, CPI on September was higher than expected. Actually, it means inflation in USA is still high. In this video, I want to explain to you that what is CPI and what is its effect on the economy. CPI is the abbreviation of the Consumer Price Index, which measures the monthly change in prices paid by US consumers and is the Federal Reserve's best tool for measuring inflation. Inflation is one of the most important things that the Federal Reserve cares about. According to the data, inflation in the USA is high for over a year. So, what caused inflation in USA? After corona crisis in 2020, many of people were forced to stay at home and leave their jobs, so the unemployment rate rose so quickly. After people were vaccinated, there was no job. The Bank reduced the interest rate by 0.25% to encourage entrepreneurs to start and expand their economic activity. As a result of the interest rate reduction, the labor market situation improved, but low interest rate makes inflation high. Low interest rate cause people to borrow more and injecting money into the economy causes inflation. After solving the problem of unemployment, Federal Reserve started to increase interest rate to control inflation. In fact, the interest rate is Federal Reserve's most powerful tool to control the whole economy of USA. When unemployment rate is high, Federal Reserve reduces interest rate to create jobs, and when inflation is high, they increase federal fund rate to reduce the inflation. Now, CNBC has reported that the CPI has been rose to 0.4% in September, more than the 0.3% Dow Jones estimated to a 40-year high. Excluding food and energy, the core CPI accelerated 0.6% and 6.6% respectively. The yearly gain for core CPI was the highest since August 1982. And the inflation is 8.2%. It's still far from the goal of Federal Reserve, which wants to reduce inflation to under 2%. As Michael Mayer said, the more inflation comes in above expectations, the more they're going to have to prove that commitment, which means higher interest rates and cooling in the underlying economy. So markets now expect the Fed could rise the federal fund rate to 0.75 percent points, hikes in November and December. Um, how we can trade with this information? The information we get should be able to help us trade. News can have different effects on currency. Sometimes high inflation can reduce the value of the currency, and sometimes it can have an increasing effect. It could be different. In order to understand the effect of a news, you should check the candle formed in the chart during the announcement hour. USCPI was out at 1:30 p.m. London time, and this is its candle. It's bearish. It seems that with announcement of this news, the value of dollar increased, and this shows us that we should look for a sell position. Well, I hope that you can use the information that I shared with you in this video in your trades. In order not to miss our videos, subscribe our channel and don't forget to like. Have a nice day. Goodbye until the next video.